One of the strengths of the system is the ability to calculate and manage and report on landed costs on all goods that are being imported. And to start, probably the best way is to go into the administrative area and talk about the different types of costs that you might want to keep track of. So in the admin, you have accounting admin, and then there's this option called cost type code maintenance. So these are all the different types of costs that we've said we want to capture about products, bank fees, insurance costs. I'm going to go to one here, ocean freight, for example. So in this case, we're saying we want to keep track of ocean and air freight as a different component of the landed cost. So we're saying specifically for this type of cost, when we're running our inventory value, we want this cost included in the value of the inventory. So some people say, I only care about the cost when I'm paying the supplier, when I'm valuing my inventory, but you have the ability on each individual cost type to say whether or not costs of that type should be included in the inventory value or not. So we call that inventoryable yes, no. This is the accrual procedure means there are different costs in the system that will be calculated ahead of time. So these can be calculated automatically by the system, or you can manually type them in. So you can start getting your landed cost calculation even before you start receiving in bills. There's these accrual procedures. So we actually have to fill these in for you. There's no user interface to do it, but if you let us know which specific costs you want accrued or accounted for ahead of time, then we'll put that in for you. And here, this is important. This is saying by default, when we enter costs of this type and we apply those costs, say against a container, for example, if that container has multiple products on it, we need to make a determination how that cost gets applied to all the products in that container. So in this case, I'm saying by CBM. So basically by volume. So whatever product is taking up more of the container by volume will also be absorbing more of the cost associated with it. And then you can put just a comment in there. This is, now we're integrating with accounting systems. Most of our customers use QuickBooks, but we have some other systems too that we integrate with. But this is one of the areas where the integration takes place. So when you enter costs, bills from vendors, those bills get applied in VISCO. You apply them against POs or against containers. And then they get posted into the accounting system. Here we're saying which general ledger account are we posting to when we're entering ocean freight costs? That's the idea. These other things aren't as relevant. This one is this still an active cost type? Yes or no? So if you no longer want to keep track of a particular cost type, you can set that to no. It keeps the history. And then there's also a tool called the price estimator that allows you to figure out, like even before you purchase a product, if you receive a quote from a supplier, you can create this price estimator tool that allows you to say, okay, so considering the FOB price from the supplier, plus all these additional costs, what will our cost be and what price should we be quoting the customer at as well? So this is saying, are we including costs of this type in the price estimate or not? That's the idea there. So let's start by looking at, I think it's important to know, because we said we're distributing costs, in this case by CBM. We're distributing ocean freight costs by CBM. So how that gets calculated is at the product level. Let's go into a product. Let's say these strawberry wafers, for example, right? So we're saying we buy these wafer in cartons, and the carton is 10 pounds. There's 10 pounds per carton. So if we were distributing based on weight, it would take the total weight and calculate how much each product weighs in the container and distribute it proportionally based on that. We also have the carton dimensions here. So you can specify, okay, we're entering dimensions in eaches. So in this case, 16 by 9 by 12.5. So the system is now calculating a total CBM per carton, cubic meters per carton of 0.0295. That's a calculated value. So just like I was saying, if we're distributing cost based on weight, we can also distribute costs based on CBM. So let's say we want to create a new purchase order, and I'm going to add a couple of products into that PO. So first off, let's just pick a supplier and we'll add 2 products into this purchase order. The first one is 291, 392. This, let's say we're buying these in cases and we're buying, actually, let me pick a different one here. So let's say we do this one. In cases, we're buying, say, 600 cases of this and pulls in what my price is for that. And I'll just pick one more. Let's say this, for example. No, pick a different one. Yep, okay, that's fine. All right, and we'll say we're doing 500 cases of this, and that's our price for that. So these are 2 different products, 500 cases of one, 600 cases of the other. Now we're going to take this purchase order and we're going to ship it. So in this case, I'm taking the entire purchase order and creating a container out of it. You don't have to do it that way. You can split it up. So a purchase order can have many containers against it, or the opposite is also true. You can have a container that includes products from many different POs. You can kind of mix and match. But just for simplicity purposes, I'm going to say create a purchase order. I'm sorry, create a container and grab all the items from this PO. So it did that. And when it assigns the container number, it just gives it the PO number by default until you put the actual container number in. But you can see in this case, so there's 600 cases of lemon wafers and 500 cases of strawberry wafers. So we have what the total CBM is for each product and total CBM for the entire container. And we also have the total weight for the entire container. So now let's just say that we are going to ship this container now. So I'm going to set a date in transit. I'll set it to June 7th. And yeah, I guess we'll just receive it as well. I'm just going to receive it and I'll say that it was received on June 7th. Of course, in real life, there would be some transit time there, maybe a month or whatever in between. But in this case, I'm just going to say we receive it. Anytime after the container goes in transit, you can start entering these cost estimates. So these values can be calculated automatically. Remember, I was saying there's accruals in place. So for example, the ocean freight accrual, there's a table in the system where you're managing. Here, I'll just show you this quickly. So let's go into the tools area. And there's an ocean freight rate table here, for example. So this is saying, if we're working with this freight carrier and we're shipping from, let's say, China to Houston. Okay, we don't have a rate for that. Just take that off. Okay, so these are saying, anytime we're shipping from China to Houston, these are different forwarders that do that route. And for each of them, we can specify a default freight rate. So if you specify those things, then when you go to create the container, this, let me go back into that container, that estimated value will fill in there for you automatically. The same is true of duty. So at the product level, we're capturing a duty rate associated with each product. So the duty accrual or the duty estimated cost will come in automatically as well. So for each of those, you have, so this is the container. I'm just going to put a real container number in there just so. Yeah, so we can enter these estimated costs. So let's say that the ocean freight is going to be $10,000 and there's drayage costs of, let's say, $800 and $200 in finance charges and maybe $150 customs broker fee, right? So these are just an idea of what these costs are going to be. And then at this point, now we can run different reports to give us an idea of what our landed costs are. Or you can start entering in costs against these things too. Like as we receive in actual bills, meaning bills that are coming from the supplier, but also bills for duty and for freight and for these other things, those bills can be entered too. So that is done in the finances area under costs. So let's say that we receive a new set of bills. So I'm going to create a new batch. I'll pick a vendor, let's say Arrow, which is a freight company. This would be what their invoice number is, and the due date, their invoice number. And then we're going to choose what type of cost it is. So you can actually have multiple cost types within a single bill. But let's say this is the ocean freight, ocean/air freight, and the amount is, let's say instead of being 10,000, it's actually 12,000. So it costs more than we expected. And now remember, because we said in the admin level, we said when we enter ocean freight costs, they should be distributed by CBM. So it already knows how we want to apply that. We just need to pick that we're applying it to a container, and then we'll pick which container we are applying it to. And I'll sort this by date. This is the one that we were just looking at. So now it brings up, remember there was 2 different products on that container. It gives me the quantity of each, the total for the accrual on each. And then this, and what we told the system is take the 12,000 for the actual bill and distribute it to both of them proportionally based on CBM. Now notice in this case, it's telling us that we are overpaying. We're paying more for the cost than what we expected to. But there's this checkbox here where we can say, okay, we're accepting that fact, and it'll keep a record of the fact that me as a user is the one who accepted the fact that I overpaid, paid more than what was expected. So that's the entry of the bill. And then if we push this button, that will take that cost and push it as a bill over to the accounting system, QuickBooks or whatever, where you actually make payments out of there. But from a reporting standpoint, there's a few different areas where we can look at this. So like if we go into, let's say the product, for example. No, let's not do that. Let's go into the inventory, and we'll go into inventory management. And I'm going to say specifically, I want to see what inventory do we have available for the one product, which was 091403. This one, the lemon wafers. So this is going to return a list to us of all the available inventory that we have for this product. And for each of them, we have the venture number, which is like the PO number that it came in on, the supplier that it came from, and when it was received. So actually, yeah, this is the one that we just did. So this is the 600 cases received on June 7th. And we also have a landed cost, which in this case is $32 per case on this one. Now you can see this is the most we've ever paid, or at least for what's in inventory. We have these other lots that we received in the past. So these are like when we received them in, and they were less expensive in the past, maybe because the freight was a little less back then, or just because our price was cheaper from the supplier, or whatever. But you can drill down into this to get the details. So in this case, the $32.28 per case. If I click on the venture number itself, then it brings up this tool, which we call venture analysis. So this is the first piece telling us what our latest projected cost on this is. So in this case, $32.28, and also our latest actual cost. So this is a sum of all the bills that we've received in against this. And this latest projected cost is a combination of the estimates and the actuals. So if we go into the price and payment terms, it says, okay, $19 per case is the price that we paid the supplier. But then this accruals area gives us all of those expected costs, what we anticipate them to be. So you see that the total amount accrued is there. And then if we've actually received in any bills, then you'll see the actual amount paid is there. The details of those costs are in the cost section. So you can see specifically what supplier you paid it to, their reference number, the date that it went in, that kind of thing. But the accruals area shows you your sum of all the accruals and the amount of the actual bills, and then the balance of the accruals remaining. So it sort of takes a combination of those things, divides it by the quantity, and comes up with that latest projected cost per case on that specific shipment. So that's one way to access the information. There's another tool, which is in the reporting area. We call Venture Explorer, where same idea, I can search by product. Let's see, this was, yeah, that one, yeah, lemon wafers. So I'm saying, show me, this is sort of the purchase order status. So all the POs for this product, we have the status on each. This is a container on the water, supplier that it's coming from, quantities, and then same idea here. You can see what our cost is per shipment on each of these shipments. So now we're even seeing the costs even before the containers have arrived. We can see what our cost is while it's in transit, or even before the supplier shipped it. We have an idea of what those costs are. And then same idea from here, you can drill down into any of these to get sort of that detailed analysis. So if I click into the analysis, it gives me a link and says, okay, my cost per case in this case is $28.58. Same idea, we can drill down and see what all the accruals are and everything, just like we were looking at. This is the same screen that you're getting to from the inventory, but you have the ability to get to it from this Venture Explorer tool, which is, again, all POs, not just received into inventory, but also things that are coming in. And then, of course, as you're selling these things, then there's some profitability analysis that you can do on the sales side. So probably the best report for viewing that is what we call the gross margin detail, where I can say, show me quantity in cases, and I'm just going to run this for this year, for example. So 1/1/2022. And this report, there's lots of different ways you can run this actually, where you're saying, so the second filter criteria comes up here where you can say, show me gross margin by customer, by sales rep, by product, by supplier. We have other ways we can do this too, but let's say we're going to do this by product, and I'm going to uncheck summarize and say subtotal by. So if you were to check summarize, then it gives you one row for each product, your total sales, total cost, and total gross profit. Because I unchecked it, I'm saying I want to see each invoice listed separately, and then so show me the profit on each invoice, and then we'll subtotal by product. So this is the product that we were just looking at. So there's 3 sales of this product so far this year. So for each of them, you have the date of the invoice. That's the sales order number. That will be the person who sold it. The purchase order that it came from, the person who bought it, where we shipped it, what warehouse we shipped it from, or did it ship direct? The invoice number, again, that's the product, customer, vendor, and then we have our sales amount, our costs, and our gross profit on that specific invoice. That's our profit, and also as a percentage. So our profit was 3,800 on that invoice, or 38% of the total. The key here, though, is this cost number that we're seeing. That cost is made up of many different costs. That's not just what we pay for the product. So you can scroll out to the right and get a breakdown of what those costs are. In this case, duty costs, drayage, customs broker fees. You kind of get a breakdown of all those. So it gives you everything. And then so that's how it's giving me a true gross profit on each individual transaction. And then, of course, in this case, we said subtotal by product. So now I'm saying that's my total profit for all sales of this product for the year in dollars as a percentage. And I can compare that against other products to see sort of what are the more profitable products. Or if we ran it by customer, we could see what are the more profitable customers, or what are the more profitable suppliers. That's the idea.